Hello, everybody. This is Victor here from Trend Following Trading for Beginners, and here's my weekly update on my sample trading portfolio coming up next. Hello, everybody. Welcome back for another week of my podcast. This week, like a couple of weeks ago, is getting again very boring. It's not much happening. And basically, the Dow Jones is up and down a bit, and the Nasdaq just try to break, even make a new high, going towards 10,000, 11,000 kind of mark. Make quite good headway, and then it got stuck. S&P basically stay in range as well, so it's not doing too much at all for the whole week. But there's a couple of things, three things that's worth note. Is basically gold. First of all, is gold. Over the week, it has broken back above 1800. Actually, I think it's one stage gone to about 1830 area. And if you look at the start of the year, it's around 1530. So in this basically the 6 months, about 7 months or so, have gone up to about 300 US dollars, which is about 20%. So it's not too bad for gold, which has been quite quiet for past few years or so, and it's doing pretty well. Last year's up a bit as well, and this time it's only half a year, so only 20%. At the start of the year, I did some analysis, and personally, I believe there's some more to go, but I'm not quite sure would it be this high initially, but the trend basically moved up, so it's quite good basically for me on a gold trade. But my initial analysis point to this year, next year, I think this is just the starting, basically showing what we can do, a bit of stir, moving up and down a bit. Next year will definitely be even higher, but that's just my general analysis, my technical as well as fundamental analysis. But I'm a trend follower at heart, so this helps me to basically find a market, and I basically just will stay on gold. I hope what I guessed before will be right, but until the market actually shows its hands, I will not know. But my analysis basically is just the fundamental side and geopolitical side. I think there will be a good match, a good case for gold to go up. But who knows what's happening? But this year, the start of the year, definitely there was case, and then we got the sudden lockdown and the recovery. So we just not too bad. But one thing I will still quite surprised. I think I talked about last episode that the gold didn't go up even higher, but we just have to wait and see. It's only about 6 months and see how it goes. But next year definitely another telltale, probably another move up as well. So let's see how it goes. The other thing is Dow Jones. Now, if any of you track the U.S. market like I do, you see Nasdaq and S&P 500 already broke back above 200-day moving average. Nasdaq, because of the technology lead shares, and just gone through the roof and just go up, 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 up. And but Dow Jones is trying to stay above 200-day moving average, like its counterpart. It did that in early June, I believe. But it's staying up above the 200-day MA line, moving average line, for only like a week, and then broke back down again ever since its attempt to try and break back up. Monday there was a significant increase in the index price, and it stayed above that, but it's only for one day and then quickly came back down again. So as far as I'm concerned, long-term view is still rather neutral for Dow Jones, but this keep on failing to stay back above the 20-day moving average. The attempts from below and try to stay above it, and just couldn't hold its position, stay above the 200 days moving average line. It's really, to me, it's a telltale sign that Dow Jones is really struggling. All this big money, loads of money from the US Fed put in the stock market in US. And still the general Dow Jones, market. I think I don't track Russell, but I think Russell probably is in similar state or something. But it just basically shows this Dow Jones, the general market, a big company, is really struggling. Technology is moving quite high already, but the Dow Jones don't seems to be doing that well. So I basically will watch this. At the moment it's still a bit mixed at the moment, but it doesn't sound right. The signal doesn't look good either. And the third thing is basically Tesla. There was a lot of talk now to say, the price continue to move up. We have countries, because due to the pandemic, coronavirus, COVID-19, whatever name you want to put it, causes loads of hiccups around the world, and the price seems to have recovered definitely. Just like during the lockdown, the price collapsed, and then when the U.S. pumped loads of money into it, and it's gone back up again, and it's continued to go high a bit like last stack. It basically got making new high, so to speak. And how, if you move back in chat and ask yourself, how did this how can this share continue to just move up when a lot of people is out of work, a lot of people maybe only on full on only like 3/4 pay or something, and because the spat between US and China is still ongoing, with China being increasing focal, what is actually going to help the Tesla share? Maybe it is because they have the big factory in China and Shanghai now, so that probably helped them. And but then China, internally, yes, the lockdown is over. They are still sporadic. We introduced coronavirus from outside, so to speak. But people are suddenly back to work. However, they're not back in full swing yet. And because of the spat between US and China, I think this will just continuing sometimes at the manufacturing industry. That means the job market is relatively, going flat, and it's not going, recovery quickly. So how really do you think, will this basically affect Tesla? Nobody knows, but at least we won't be, going parabolic. As far as I'm concerned, early in the year, near February, well, I think last year, near a couple of years ago as well, there's loads of short sellers on Tesla. I think I read somewhere last year Tesla is one of the top 5 share that's short most in US. And then the price basically broke above the 1,000 mark for the first time back in early February, and a lot of that is due to bear squeeze, basically. Tesla starting to able to make a profit and deliver what is promised on the number of cars that is manufactured and actually push out of its product line. So it's getting there, and then all this short got squeezed and the price could continue. If I remember, it was like $400, $600, and then go $800, and then go boom, go straight up to like $1,000 within a month or something. And then we of course have the coronavirus, and the whole price came back down again, but it just go very quickly recovered, and now it's near about just over 1520 mark. That's hell of a lot, compared to February before the lockdown. That's like up 50%. That's having the major drawdown 30% in the share market in US, and then recovered. So this is quite weird as far as I'm concerned, but it is well talked about it a bit more because it shows what trend following is supposed to do. Those day traders, fair enough, they can get a lot of money out of that on a day-to-day basis. But for trend follower, if you go back in the end of March, early April, when they started to recover short term, and then slowly over long term in around end of April, May time. If you have stayed with this share when it's recovered and you're trying to move up, you make quite a bit of money. You can recover. You probably recover all the losses, and then some. And this is a funny thing about trend following. Sometimes, whatever the market sentiment is for a particular share, in this case Tesla, a well-known company, and the price just go up and recover from its previous low, also from this previous high, and just continue to move up and up and up. And a lot of people just like myself, so are quite wondering why the price continue to move up. But as trend following goes, when the price going up, you do not want to get out of the share just because your own fundamental analysis or your own bias, your own thinking, or even the market general noises, the financial news and such, to say the price is gone too high enough now. I mean, even Elon Musk come on and say the price is too high, because I think he's quite worried that if one of the numbers slipped, it would just go down quite a lot. And I'm not quite sure what will happen, but especially I think this month, they probably will have a lot more financial news coming out, the financial reports from all the shares, all different type of shares and stuff. So Tesla will be one of them, but basically we just have to wait and see. However, going back to trend following, when the trend is moving up and your system say go and stay long and go long for it, you stay, you just go and stay there. Doesn't care whatever other people is talking about, what the news talking about, what other gurus are talking about, including myself. You just follow your own trading system, your own methodology, you and work things out. And that is quite important to actually to remember that and to look into that and then see what type of things in your system actually telling you to actually stay with the share. But even though the market sentiment suddenly start turning and ask a different question, so to speak, and say why the trend is still going to go up, it doesn't make sense. But as long as the trend is moving up, you don't really care. You just will continue and stay there until the trend basically bends and basically bites your butt a little bit, and then when your system then say, okay, the market have turned now on the end of day share price basis, and you just go and basically get out of the market when your system telling you. So the main thing is trend following means no prediction. We don't care what other gurus are talking about. We don't care about general technical analysis that tell you this is the profit target, this is the price that's supposed to go high to, or head and shoulder, whatever, blue flag, whatever, triangle formation. Because sometimes sentiments, people, at the end of the day, trading is about emotional trade. People out, we might be not emotionally trading as a system trader, but the market is generally driven by emotion, extreme fear and extreme greed. And with extreme greed coming along, it can push share price going up much further. And so it's extreme fear, what we have seen in March. And so what we basically see here in Tesla is when the price is going to go up, don't get out of it, don't get off the trend, and just wait. I mean, it's very difficult for a lot of people, especially new trader, when they're making money. And they want to, especially this trend has gone up quite a bit and you have quite a bit of money on it. It will probably show you quite a very good profit. A lot of people start to scare that you might lose those profit. But as far as I'm concerned, if the market trend is still going up, stay there. Don't go away. Don't get out of the trend just because other people say so, whatever. Stick with your system and don't predict what is going to happen, and just let the market tells you what happens. So this one is worth looking at. I'm tracking it personally myself and also have some shares of it. I'm betting on that. This relatively making good money. And as far as concerned, long term, medium term, and short term is all using my system or say going up. So I stay put. I'll just continue to go up. And remember, when the trend is up, don't get off of it. It's very much like a bus. Don't stand in front of the bus, you get crushed. If you either get on the bus or stand on the side. Okay, but if you are lucky enough to capture this one, just stay on the bus until you go to destination. Okay, so just stay on it. Anyway, that's all the update for this week. Next is an update of my portfolio. Okay, first off the bat is Apple, and just like last week, short term is a buy, medium term is a buy, long term is a buy. Next is Amazon. Short term is a buy, medium term is a buy, long term is also a buy. USD against Australian dollar against USD. Basically, again, same as last week. Short term is a buy, medium term is a buy, long term is a buy. So continuously, US dollar is still weakening, and Australian dollar is benefiting from it, so it's staying strong. Next is Brent crude. Short term is a buy, medium term is a buy, long term is neutral. WTI. Next is after that is WTI, which is crude oil, US crude. Short term is a buy, medium and long term is still neutral. So crude oil in general, is still in the short term, is still moving up. It's been like that since I think March, April time, just continuously, slowly moving up a little bit by a little bit. And all this negative 37 US dollars per barrel is all gone. All this talk of even minus 100 US dollars is a laugh, but it just continue moving up. So we have to wait and see as the lockdown eases around the world. Normal trade start up, but then will it actually continue move back up, stay above 40 for long or even 50? I don't know. You just have to wait and see. But the trend short term wise definitely is up. So stay on it. Next is DAX from Germany. Short term is a buy, long term is a buy, medium term is a buy as well. So it's just like Apple and Amazon. Next is Dow Jones. Basically, short term is now a little buy now, so it's quite good. Medium term and short term is long term. Sorry, medium and long term is still neutral. So like I said earlier in the podcast, the price really struggling stay above the 200 days moving average. The short term share price might have gone back up to a buy zone, but then it's just having difficulty stay above the 200-day moving average. So as far as I'm concerned, I stick my system. I still buy, but I'm cautious not adding anything on until the price at least stay back above 200-day moving average. Next is UK FTSE 100. Short term is a sell, medium term is neutral, long term is changed from last week neutral to this week's sell. So FTSE basically not doing too well in the long term and short term as well. Medium term is still neutral. Gold is next. Like I said before, gold broke back, stay back above the 1800 mark. So let's see how it goes. This is the first, week basically stay above that, and we just have to wait and see what happens. So short term is buy, medium term is neutral, long term is also a buy. So this sideways trend is basically on gold is slowly moving up. So see if it can stay above 1800 this coming week as well. Next is Hong Kong Hang Seng Index. Short term is a buy, medium term is a buy, long term is neutral. So I talked about it a bit last week that for some reason there's a lot of money going into the Hong Kong market. I'm not sure what's actually going on when everybody else is all the big countries, Western countries against China with this introduction of the security law. Everybody think the end of democracy for Hong Kong, but then there's a lot of money going into it. I'm not sure it's actually going to Hong Kong market or is it going to the Chinese market in general, but I think both is actually happening. Money packed in Hong Kong and some of it using Hang Seng Index, which is actually showing in the share price, but I think probably quite a lot of it also going to China as well. So all these talks about how US might have a go at China by not allowing certain banks to exchange US dollar in Hong Kong or so forth to hurt Chinese banks and business in the country. I think it's just a lot of BS because just before the handover as well, Hong Kong is basically money port for both UK and US. Okay, after handing over, Hong Kong is still very much a financial center, and for around the world basically, and especially US US companies make a lot of money out of Hong Kong as well. So if they actually says, let's say Donald Trump suddenly said executive order say stopping some banks or foreign banks going to Hong Kong or able to exchange US dollars with Hong Kong dollars or yuan or something, it's just going to hurt themselves long term. I don't think US really want this gravy train to stop. So I think all this political stuff is quite, geopolitical stuff is quite, good to look at a sideshow. But the market basically show its hand and said, okay, Hong Kong index, short term is a buy, and medium term is now also a buy, and long term not yet. But basically the security law is not really doing much to it. Next is Nasdaq and US. Well, basically, this is full of loads of technology company, and it's basically short term, medium term, long term is still a buy. So it's trying to break about 10,800 or something, or even trying to attempt even higher. But it seems to be last couple of days pause a bit. We just have to wait and see. Nikkei in Japan's continue its upward trend, and its short term, medium term, long term is all buy as well. Silver, similar to gold, short term is a buy, medium term is neutral, long term is also a buy. So gold and silver, it seems to be having some movement there, and we just have to wait and see. Next is US dollar against Chinese yuan. Short term is a sell, medium term is a sell, long term is a sell. So basically, across the board now this week, is basically across the board is sell for the US dollar against Chinese yuan. So essentially, what happened that means is the US dollar is weakening. So as I said before, Australian dollar is going up. The Chinese yuan is also moving up as well. So we just have to wait and see what else is actually happening. But if any of you is trading the Chinese yuan, then you just have to watch out. It's quite, the sentiment from the market, from the analysis point of view, has just turned, basically become stronger. And I think probably with stronger still, the US dollar is going to be tanking. But we're lots of people are talking about US tanking for a long time now. We just have to wait and see. But with this pandemic, coronavirus lockdown and stuff, the Feds have pumped from 4.8 trillion on its balance sheet up to like now 7.2 trillion in a space of like 3 months or something. It's a hell of a lot of money. And remember last time when we were back in 2008, it was like 2 trillion or something, 1.5 trillion, and then they pumped loads of money into it, and then got up to like just over about 5 trillion or something. Gone back down a bit to 4.5 trillion. Now it's basically gone up again to 7.2 trillion. All this money have to go somewhere, so it's continued to weaken the US dollars. So we just have to wait and see how it goes, how that will affect the US index. Next is US dollars against the Japanese yen. Short term is a buy, medium term is neutral, long term is a sell. So long term basically have changed from neutral to sell this week. Next is British pound against Japanese yen. Short term is a sell, medium and long term is neutral. After that is British pound against US dollar. Short term is a buy, medium term is neutral, long term is neutral. So from British pound against USD point of view is moving up. Just the euro, Australian dollars, is so forth, because the US dollar is weakening, and you basically actually can see that. But against the yuan, it's still a sell at the moment. So just it's a mixed message on the British pound at the moment. Next is Bitcoin. Short term is a sell, same as last week. Medium and long term is still neutral. So from as far as I'm concerned, it has been for Bitcoin, it's been like a sideways trade now, and now the 50-day moving average is catching up to its position, and still having problem to break back above the 10,000 mark. So it's basically between 9,000 to 10,000. It just continue to fluctuate at 1,000 or $1,200 range. So for time being, short term is sell, same as last week. Medium and long term is neutral. So I'm not very hopeful at the moment for Bitcoin until at least it's break back above the 50-day moving average. And I think the major confirmation of the price actually going up is actually just stay above the 10,000 mark and really stay back above it, break above it. Otherwise, it still continue just sideways trade. Last but not least is the iShare 20 TLT ETF. Short term is a buy, medium term is neutral, long term is changed from last week neutral to buy. So this is also a telltale sign as well that when the bond market sort of going up, basically yield gone down, the market is generally the major market is not doing well. So this sort of showing the struggling of Dow Jones, Charlie move up, but it's having difficulties. As well as the Nasdaq and the S&P 500 seems to have hit a short-term ceiling. We just have to wait and see, but there's quite a few confirmation signals. We just have to see how the market will play out. God knows how the market will be this year. So far, the first 6 months has been quite volatile. Lockdown, and then the massive pumping of money from the US Fed and also around the world, and stock market just gone up and up and up, and now it seems to have gone sideways a bit, and we just have to wait and see what the market actually do. The market always shows its hands, and we just have to wait for the market to to tell us what to do. Remember, trend following is not predicting. We're not even guessing. We just wait for the market to come out, give us a price. We plug in a calculation, and if that calculation tell us that you go buy or go sell or stand aside, we don't predict. And because as far as I'm concerned, it's a marks game. I'm not good at predicting, and there's no point predicting because we basically predicting if you want to predict a mass ball of emotion, mass ball of people, and basically like sardines, you're predicting whether the group of sardines is going to move this way or that way, up or down, sideways, whatever. It's just anyone guess, and I'm not that clever. I don't have a crystal ball to actually guess what the market will do. I just basically use my system and just follow my system and see how it goes. And that's the end of this week's podcast, and I'll speak to you next week. Bye for now.